Good evening and welcome to another episode of Poor vs. Standard. Poor here, and as always, I'm not a financial advisor, so any opinions within this podcast, YouTube video, what have you, are for entertainment purposes only. Please don't sue us. Don't do it. As always, if you get any type of entertainment or enjoyment out of these podcasts, do feel free to subscribe to us on the YouTubes or, wherever you may find us. Like us, give us some, nice reviews, sound back, that kind of stuff. Or if you feel like we're actually worth your time and effort, you can always join our Patreon for exclusives as far as plays of the week and things like that. You can find us at patreon.com/poorvstandard. And as always, we are able to be asked questions via Gmail at poorvstandard@gmail.com. You can also find us at Twitter at vs_poor. So, with all that out of the way, let's get into it. What do you say? So, a bunch of earnings happened last week, and a bunch more are going to happen this week. The big tech stocks got out of the way last week. And the news that I want to cover is about the mortgage and forbearance and moratorium ending, as well as the renters version of that, I guess is the way to put it. You can't evict people, basically, even if they're not paying rent, which not a good thing for a healthy economy. However, your friends at the government, Congress, decided that they were going to all go and take their long, fantastic vacation, 6 weeks, and not sign any piece of legislation that would extend or otherwise dampen the blow of what is about to happen as of, this month. And I did just write a long article about this for the patrons, as far as my thoughts on what's going to happen in the real estate market and what's going to happen short term to midterm, as far as the rate of rent, the rate of mortgages and that kind of thing, and how much house values are going to be affected and that sort of thing. It's not the best to just kind of rip it off like a band-aid. People, when you shock the system like that, people really don't react very well. It's necessary, don't get me wrong. You can't have people not paying rent for this long of a period of time without any repercussions. You can't have people not paying their mortgages this long without there being some major repercussions. But in the grand scheme of things, there's probably a more tactful and easier way to do it. And, they didn't do it. And House Speaker Nancy Pelosi said that it's in the CDC's purview of being able to basically extend the mortgage moratorium, which the CDC doesn't have that power. There was a court case that explicitly stated that they don't have that power. So her trying to pass the buck as of not getting it done to the CDC is really just like very see-through bad politics, to be honest with you. So, but this isn't a political show, so we're not going to get into that. But yeah, so if you haven't been paying your mortgage, be prepared for what comes when the bank decides to come knocking. If you have been paying your mortgage all along, good for you. If you haven't been paying your rent all along, not cool. If you've had the money to pay your rent and haven't been paying your rent and been spending it frivolously on other things, you have something coming for you, and there was a way to prevent it, and you didn't take it. If you've been saving all that money to pay rent after the eviction moratorium went by the wayside, and you've saved up, several thousands of dollars, like, 12 plus, because you've had an eviction moratorium for 12 plus months, right? And you decide you're going to buy a house with that instead of pay your rent, well, no one's really going to fault you for that. You saved the money, you did what you're supposed to do with it, I guess. So you played the system completely and utterly to your advantage, so everyone would. No one's going to fault you for, taking every advantage you can in life. Your landlord won't be happy, but, what do you do? Not everyone's going to be happy in this scenario. But that was the big story that I wanted to cover. And as for the earnings plays, as far as Amazon and everything else that happened, Amazon released their earnings and they took a 7% dip, which I think is a massive overreaction because they didn't miss their earnings by that much. So I think that 7% dip will be corrected if we don't have massive bearish trends on Monday, Tuesday, Wednesday because of the real estate market. You could see Amazon correct somewhat. So, play it accordingly. I plan to. As you can see, I do have an Amazon position based on what we see here. Right here, I have some options on Amazon, but we won't get into those right now. The patrons know what they are. So if you want to know what they are, feel free to join the Patreon. And again, don't feel like you have to. It's just I'm pushing it because the more patrons we get, the better we can do. And the more content I can provide for everyone. So, and that's the goal, is to provide a substantial amount of content for everyone, some more free stuff and more goodies for the patrons as well. But yeah, so overall, last week was an okay week. We're still way down from our all-time highs. We're still way down from the last few weeks. And yeah, we're going to try and correct that here in short form. So, all right. Yeah. Also, this is why I say never to put more than 25 to 30% of your portfolio on margin, because we took a huge hit from 38,000 down to 23,000, 15K hit, and our margin is now almost half of our account. Not quite, but it's pretty damn close. So it's a lot more than I would like to have at these levels, but that's why we didn't go to 50% when we were at that height, because if we would have gotten margin called so bad. So let this be a lesson to you. And this is the public account, so I do some weird shit in here sometimes. But yeah, that's that. We'll work our way out of this hole, though. I'm not that worried. It is Sunday after 8 o'clock, so futures are open. And futures are currently in the positive, which is a good sign. It didn't, bomb right through a hole based on the mortgage moratorium stuff. So that's a good sign. If we can keep these, percentages up through, open at least, that would be very good. That'd be very, very good. So we'll see if that plays. Bitcoin, Ethereum, they say they're down, but I mean, yes, Bitcoin's down from its 41,000. Ethereum actually was up to 2,800, if I recall. Currently trading around 2,500, and Cardano is at 131, and it's been playing around that 125, 135 area for some time now. But yeah, they're looking better than they were. They're in better shape, and I think you're gonna see them fly even higher at some point here real soon. But I have no crystal ball, so who knows? Okay. Now, there is a thing that I want to discuss with everyone. And we've discussed I guess what brings me to this is the short squeeze stuff. We've covered it, and we'll keep updates on it and stuff. But I want to remind everyone that the meat of the episode, this is why it is there's more than just that to the market. There's several other sectors. There's several other things happening. And if you put blinders on and focus on this one thing really, really hard, you will miss opportunities. You will not see the bigger picture overall. So, yes, this is exciting stuff. The AMC, GameStop, Clove, the squeeze plays. I mean, I've been playing them right there with you. I got some of this FUV. I think that'll probably hit a squeeze because it was 50% shorted and things like that. It's fun, but it's not something I'm going to risk my life savings on. I think I have 10 shares of that. it's, it's just to watch the movement go and see what happens. It's nothing like I have one share of GameStop because power to the players. But yeah, this is not something that you want to put up so much money into, or at least myself, that you're going to live or die based on how that goes, because that's gambling and you don't want to do it. But you do want to take a measured approach. You want to make sure that you have, your power stocks, your Microsofts, your Amazons, your things like that. You want to make sure that you have your growth stocks. You want to make sure that you have a balance in your portfolio so you don't get taken out by just holding one thing. But you don't want to have too many things either. It's a balance. If you have too many things, you're going to start mimicking the market. And if you start mimicking the market, then why are you even putting all that time and effort in? You want to do better than the market. So you got to follow through, and you got to do your due diligence to find those plays. And so basically what I'm just saying is, don't forget the basics. Don't forget the reasons you started investing, and don't forget to have fun with it. Like, I have fun doing this stuff, and sometimes I feel like I forget that, or I don't display, the fun side of things. I get very cynical and angry, and it doesn't come through in these podcasts that I'm really a fun guy, and I enjoy having fun doing this. And I want to relay that fun to you, and I want to, share my experiences with you. And I feel like we got away from the fun for a little bit. Just with all the AMC stuff and things that are happening. So I want to try and get back into that. And if you're not having fun doing what you're doing, you should figure out a way to have fun, because life is short. Things don't always, happen the way you want them to. And any minute, any time, any one of us could, be not here anymore. It hits kind of close to home for me because, I recently lost a family member that way too young, but it's just a reminder that, you got to do the things you want to do, and you got to, enjoy the time you have, because it could be cut short at any moment. But you just have fun, enjoy. Don't do illegal shit. Don't do, mean shit to other people, but have fun doing what you're doing. Do what you love, find a way to get paid for it, and enjoy. And always have, be responsible in everything you do, but make sure you're having fun doing it. Like, just, if you're in the stock market because you want to get rich quick is going to be 10 years. If you can get rich in 10 years in the stock market, then you're doing something right. But, and again, this is a slow burn kind of thing. You can absolutely get rich in 10 years in the stock market. There's no one, if you're getting 20+% year over year on the things you do, and you hit more than you miss, you'll be rich in no time. And no time is going to be 10 years. Enough to retire on in 10 years. Absolutely. You could do that. You got to put the work in. It's not going to be fun. And if you're not having fun doing the work, but you can see the big payoff at the end, is it worth it to you to have that little fun for that long to enjoy the rest of your life? Assuming that you have the rest of your life to do that. Yeah. And just, I find that I have fun with all my hobbies, and I have a lot of hobbies. Whether it's, reading, 3D printing, plotting adventures with friends, that kind of thing. But it's finding a way to get paid for those things. That's the difference. Like, I can't get paid a lot for 3D printing because I only have the, one 3D printer. I can't get paid for plotting adventures with my friends unless I, do a lot of work and become a professional adventurer, I guess. I don't know. Some type of tour guide. But I can get paid for picking stocks. And I'm paying myself by picking the right stocks. And you can do the same. And you can follow and see the things I get right, the things I get wrong. Add to the discussion and say, hey, I don't like this stock for that reason. Or, hey, I like your idea behind this stock. That seems like a legit play. And, it's not, I'm not asking for confirmation bias or anything. I like opinions on the things that I talk about, and I hope you would appreciate, constructive criticism too. That's how we will all learn and grow through this together. So I just, wanted to say that and get that off my chest, that we should be having fun with this. This isn't, a job for anyone. So enjoy it, relax, sit back, and let the good times roll. So with that, we're going to go into some of the other things that I wanted to talk about as far as the play of the week, or not the play of the week, the Swinging for the Fences play, which I believe we're going to do an options play on FUV. Was it this one? Yeah, so this was the play what we're going to do. It's a $12.50, $15 call debit spread that expires at the end of the month on August 20th. And I believe that we are actually already in the money. No, I guess we're at zero. Interesting. Hold on. Let me do a thing here. Yeah, we're already $20 up from where we bought it. But yeah, so this is the play, and hopefully it works. If it squeezes, we could sell it early and get, like a 50% return. That'd be hot. But yeah, this is something that I think has a good chance. I know it's over the $100, but I thought we were going to try and raise that anyway for the Swinger at the Fences. It's about $150 right now. That seems a little high for something that's only $250. So if you can get for $125 or better, I'd get it. That way you have at least a chance of doubling your money, but we'll see. And if it stays at the current price and theta decays, this should get worth more and more money. So that would be an exciting time. Yeah, but that's my play. It's Arcimoto, FUV, ticker symbol. And we're going to do a August 20th, $12.50, $15 call debit spread. And yeah, hopefully that, earns some of you some monies if you play along with me. If not, I can't blame you, because this is, again, not financial advice. So, appreciate everybody. Appreciate you hanging in there. Thank you so much for listening and paying attention. And as always, have a good night. Trade well. Be safe.